Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's kick things off with the pre-market activity. We'll begin with the S&P 500, and most of these indexes that I'm going to go over, they're at multi-week highs now. We are up this morning a bit shy of a quarter of a percentage point. It appears as though we are consolidating here overnight. I would expect us to hold and break higher. Now, yesterday, we closed out a number of our short positions, and we are now long of the market. The NASDAQ, very similar to the S&P 500, doing a bit better on a percentage basis this morning, consolidating. I would expect, after seeing a breakout on the 9th, a continuation move higher. Members, we're going to do a market wrap tonight. I did not do a market wrap last night. You're not losing your mind. But I will post one in the members area this evening. And we'll update the positions as well. The Dow Jones, again, very similar as to what we're seeing on the other major averages. And we're looking for a continuation breakout of this mini wedge formation. Note how we broke out here on the 8th, consolidated, rallied, then pulled back, did a retest, and flashed a bullish key reversal yesterday. That's really good stuff. That's a sign of support below. So remember, on most of these charts last week, we were talking about this cup with handle formation, and we are now breaking out of that formation. If we break out and close above resistance here, let's call it 24.9 on the Dow, expect some short covering at a bare minimum, and obviously a continuation move higher. Looking at the dollar, I mentioned yesterday that I expected to see the dollar weaken up a bit. And we did, later on yesterday morning, see that weakness appear. Yesterday morning, we were here. We broke down. We were limping back, attempting to recapture a prior support level. It failed here. Then again here. And I mentioned to members that you might expect to see a rally back, an attempt to put in a new higher high. My guess is that we would put in a lower high. And right now it appears as though we have done so. Now we're looking for a breakdown below this low here seen yesterday the 9th. We have already broken down on RSI. What should do well in a dollar which is stalled to weakening? Gold, silver, the miners. Here we had a consolidation. Here's the upper band, the lower band, a breakout here on the 9th being yesterday, and we've been consolidating ever since. I think that we're breaking out fairly soon on gold and the miners. Silver, same deal here. We were in a tight consolidation. We broke out, consolidated more. We're breaking out again. We're up this morning. So watch the currency markets. Watch for a weakening U.S. dollar. I've been saying this for several days now that I believe that the price performance of the U.S. dollar was a blow off top in the short term. Longer term, we have a breakout on a weekly basis. I'm not ready to call the dollar dead yet. I'm long-term bearish on the dollar, and I was rather surprised to see this move higher of late. But it was an overcrowded short trade. And I think that what currencies traders did is that they leveraged the breakout of peace with the North Koreans, the potential for peace anyway, and the misinterpretation of the Federal Reserve's statement as a reason to, A, cause a short squeeze, and then after the Fed statement to have a continuation move higher on what I believe to be a misinterpretation of that statement. And I'm standing by it. So watch out for precious metals. Bitcoin. We haven't spoken about Bitcoin in a day or so. And I warned here, the last time I spoke about it was above the support level here on the 8th, and we were pressuring support. And I warned, beware, if it breaks, we're coming down here. And sure enough, that's exactly where we hit. We have now since bounced back. We're attempting to recapture support. Have we done so? We have. Barely. So what I would look for here is a continuation move higher out of this very, very tight trading range. And where I think that you'll really see Bitcoin catch a bid is on a rally and a close above 98.40. We have RSI with a double bottom setup. We have broken out. So a very tight consolidation. We're showing some signs of strength. Watch for a breakout here on Bitcoin. Let's go for the higher level view, pulling back a bit. We have an inverted head and shoulders setup. Left shoulder, head, right shoulder forming. You can use this as your neckline. 95.65 being a really nice level to see us break out of. Now let's move on to member stock chart requests, which is where I review the symbols that our gold members submit for me to review on video. The first chart up, EQT Corp. An interesting chart in that we have a stock which was in a long-term downtrend, now attempting to form a bottom, a double bottom setup. In fact, an undercut double bottom setup. What does that mean? It means that we bottomed out back here in December of 15, rallied, never broke out of the downtrend. We have since pulled back, retested support. It failed, broke down below prior support, then bounced back on this bullish reversal bar. Really good stuff. We have drifted back down, and now we are holding prior lows. So this is really an easy one to decide where am I going to put my stop. If we break down below either 45.16 or at the maximum 43.65, you need to be out of this trade. We are breaking out this week. I would wait to see whether or not we close out the week above this upper band of resistance. If at 4:55 in the Eastern Standard Time Zone, we appear poised to close above that current support level, which was resistance, then you can open up a trade. Don't be shocked, though, in the coming week or weeks to see a pullback and a retest of that breakout point. A successful retest and a continuation move higher, you can add to your position. RSI has broken out. Stokes, higher lows and higher highs. Good stuff. Ultimate oscillator, higher lows. So the weekly chart is looking good. Daily chart, RSI, higher lows and higher highs. Stokes beginning to break out of this triangle formation. And we have broken out on the daily chart. Now, yesterday, we closed off the highs of the day, which may be an opportunity because I like this setup here. We broke out, we pulled back, and again, this is a very volatile stock. Broke down below support, and then they reversed it the following day to break it out yet again. How is volume? Volume's been rising. That's good stuff. So you're seeing some institutional accumulation here. I think the shares can be bought, but just keep in mind you have a lot of overhead supply to work through, and the key to getting through overhead supply or keys is A, time, B, volume. The next chart up, NFX, New Field Exploration. Weekly chart, we are in a consolidation range. And the problem is that we're about 3/4 of the way up to the upper band of resistance. So really not much of upside potential here before we hit significant resistance. So I'm not loving this setup here, besides the fact that it's an individual name, and if you take a look at the IXC, the Global Energy ETF, you can see that we are putting in higher highs. We've already broken out of a downtrend. And by buying an ETF like IXC, you're accepting less risk, and the shares are already on the move to the upside. You already have momentum. Whereas with Newfield, an individual name subject to headline risk, we haven't broken out yet. So I wouldn't like this trade because I'm accepting too much risk, not enough upside potential, and I have opportunity lost by not embracing IXC and buying that ETF. Now, taking a look at a daily chart, we are consolidating. We bounced off the lower band of support. I'm not sure what the short interest is here. I would be curious because that would be a catalyst that might entice me into the shares were we to break out above this upper band of resistance, because that's something that could really cause the shares to move higher in the short term. Now, if we have little to no short interest in the name, then again, I'll defer to buying the IXC or another ETF that is already broken out of a sound base. You don't have that here yet. So I don't think that these shares are a buy yet. They have yet to prove themselves worthy of being added to your portfolio unless, of course, we break out. You know that there's a lot of shorts to get squeezed, and that's the shot. The next chart up, Cayenne Bay Therapeutics, weekly chart. We have our base. We've broken out of that base. We did so back in early 2018. A huge run here. Very nice. The uptrend is clear and defined. We have pulled back in 2018. We are in a bull flag formation. This uptrend is sound. It's a long-term play. I don't see a short-term play here. I think it's a long-term play. The one thing I do not like are the Stokes trading down below the 50 level. So you may have to wait for these shares to find new momentum. And that means with both lines on Stokes trading down below 50, you'll see a lot of rallies fade. So I'm not a big fan of seeing both lines on Stokes down below 50 and declining. Down volume has been very light, but so is up volume. So on a weekly basis, I see no rush to get involved here. When would I feel compelled to buy the shares? On either A, a pullback and a retest of support, which we've already done this week, or B, a breakout and a close above this upper band of resistance. Daily chart. Now, on a daily basis, I have my concerns now. RSI making lower highs and lower lows. Stokes lower highs and potentially rolling over. Yesterday, we broke down below the lower band of support. I would avoid these shares right now. Even though they rallied off the lows of the day, they were unable to close above resistance. That is a lack of conviction by longs and a lack of interest by institutions. Volume rose yesterday to the downside. So the only interest that institutions are showing is that they wanted to get rid of some shares yesterday. So just be careful here. I'm not saying go dump your shares, but if we start breaking down to below yesterday's lows, I would seriously consider lightening up on this position. Now, if we happen to recapture support, well then, it's game back on again. But the shares, if you're not long of them right now, they need to prove themselves worthy of being in your portfolio. Right now, they're not doing so. The market is sending you a signal. ECYT, Endocyte Inc., a really nice chart on a weekly basis. Higher lows, higher highs. We have broken out of a downtrend, clear and defined uptrend now. We have a new weekly high. Our volume is good so far this week. Stokes are rising. RSI is rising. Ultimate oscillator, higher lows. All we need now are higher highs. Daily chart, we were in a wedge formation. We broke out of it. We became a bit oversold relative to the 2 and 3 standard deviation Bollinger Bands. Yesterday, though, we had a bullish key reversal. So I think that we're moving higher here. I think that these shares can be bought on a new daily high as a short-term swing trade with a stop right below 10.85. Unisys, UIS, weekly chart, long-term downtrend. We have broken out. In fact, we had a failed breakout here, pulled back to the 50-period moving average, which is now flattening out, which is good. We have broken out successfully. We pulled back last week. We retested the breakout point. We are now up on the week. Now, we broke down on RSI, which wasn't an uptrend. We're now seeing a challenge to RSI. Do we break out or do we break down above this resistance level? What was support is now resistance. Daily chart. Okay, so what we're seeing here, we have a double bottom setup, a breakout above the pivot point at 9:15. We rallied, we pulled back, higher low, limped up higher, bullish key reversal. Now we're in a bull flag formation. I think you could buy on a close above 12.25 as a swing trade. The SOXS weekly chart. All right, so the semis, we closed out our short position. I believe it was last week that we closed it out. Thank goodness that we did, because we have now broken out above this upper band of resistance. We have RSI, which remains in a downtrend. But now we are moving higher with a new weekly high, assuming that we close at current highs or higher. 2 trading days left to go. Volume this week is coming in lighter than average versus last week. So while it's great that we've broken out on price, the week isn't over yet. We haven't seen this breakout put in the books yet, because if we see selling, it can get taken right back down below this lower band of support in a heartbeat. We have no indicators leading price performance yet. So I'm kind of ambivalent about the weekly chart. The daily chart is a bit concerning in that while we have great price action, RSI has yet to break out, but it is leaning into resistance, but it hasn't broken out yet. Volume, though, this is where the concerns comes in. We have broken out above resistance and even closed above the 50-period moving average, but volume is horrible. So where are our institutions? And is this all shorts covering? Because if it's all shorts covering, that is finite. And when we get a pullback, we're going to need institutional support to help us from falling back down into this downtrend. And the last thing that you want to see are the shares fall back down into this trading range. Because if this breakout fails, we're going to come all the way back down here to the lower band of support, and we could, depending upon the overall market, break it. Now, that's getting ahead of myself. What might happen here is we get a pullback and a retest of support. If we get that, that might be the validation by the markets, by technicians, that it's all safe to go back in the water on the semis. Right now, they may be looking at this saying, you know what, this could quite be exactly what this guy's talking about, is a short squeeze. Let's wait for the pullback. Let's see if this prior resistance level will now act as support. Now, that doesn't mean that we do not have a trade here. If we get a new daily high, you want to put on a Momo trade, fine, go for it. Use a trailing stop loss order, or at the very least, use a stop right below yesterday's lows. Get out quick. Because if this breaks, we're coming all the way back down here to 175. And that is it for this morning, folks. If you watch this on YouTube, please subscribe to my channel. Give me a like. Click that bell. Get notified of future videos. If you're watching this on the website, enter your email address. We hate spam too. You'll not be spammed. We'll get a couple of free trade tutorials. And if you found us through StockTwits, Twitter, Seeking Alpha, follow us there. Leave a comment. Everybody have a profitable trading day and be well.